to analyze large volumes of data as per requirements. SME, a leading fintech company in India. Get in touch to know more.
SME Solutions and Resurgent India presents a virtual session on empowering MSMEs, navigating challenges in digital lending growth. Moderator Mr. Praveen Khanna, Vice President Alliances, SME Solutions. Eminent speakers: Mr. Ryan Malhotra, Founder and CEO, Neofinity; Mr. Vinod K. Singh, CTO, Considerus Limited; Mr. Bhuvan Rustagi, Co-founder and COO, Paranam.
Hello and a very warm welcome to our esteemed panelists and our audience today on this very pertinent and contemporary session about empowering MSMEs and navigating the challenges in digital lending growth. My name is Praveen Khanna, and on behalf of SME and Resurgent India, it will be my privilege to be your host today. We're joined by an esteemed panel of members from the banking, fintech, and financial services industry, and it'll be our honor to learn from their deep domain experience and the journeys from physical to digital lending. Now, before I invite them to share their views, a few highlights on the enormous growth of digital banking and digitization in India. Now, there are two positive themes that are underway in India today, and this can make it an India's multi-year decade. There is a significant investment that's going in the physical infrastructure, the roads, the rails, the airports that we are witnessing now. And then there is the other investment, which is on the digital infrastructure. Digital banking and fintech is increasingly becoming omnipresent today, right from wealth management, insurance, payments, and of course, lending. The expected market size for fintech will grow to about 8 lakh crores by 2026. India has the third largest in terms of the number of fintechs globally after China and US, and the highest adoption rate at 87% as compared to a global average of 64%. There are net 700 million users who are accessing internet via mobile, and it is estimated to reach almost 1.5 billion by 2040. From the first phase of digitization in financial services, I think via the opening of the Jan Dhan accounts, to the second phase via UPI, we are now in the third phase, which is being led by digitization in lending. This is happening with the development of loan service providers, neobanks, the emergence of the account aggregator network, and the setting up of the digital banking units as proposed by the government. Another pleasing statistic is the rural internet growth, which is growing at 30% CAGR over the last 5 years. The account aggregator model itself is growing 28% week on week. India's digital lending market, which was worth USD 270 billion in 2022, is expected to reach almost 1.3 trillion, presenting a 5x growth in this decade. Digital consumer economy is also expected to reach USD 800 billion in 2030, which is a 10x growth from 90 billion from 2020. There's been a recent Equifax Experian report talking about fintech trends. Some very pleasing statistics. Digital lending volumes grew by 131% to 7.26 crore loans disbursed in FY23. Average ticket size itself was 12,989. The share of small duration loans is largest. And of course, the younger population, the Gen Z population is ruling this progress. The top 5 states, Maharashtra, Karnataka, UP, Telangana, and Tamil Nadu, accounted for almost 50% of the disbursement. New age fintech players have largely focused on personal loan segment, the less than 50,000 segment, which is on the BNPL side, business loans less than 5 lakhs, and supply chain financing. There's rapid evolution of the regulatory framework. A 40% drop in manual KYCs now as compared to digital KYCs, 85% reduction in costs with the adoption of eKYC versus manual KYC. And 40% of lending is going to happen through digital channels by 2027, a growth of 15% CAGR from 2020. So 52% of India's adult population is digitally active today, and therefore lending by fintechs is now exceeding the manual means. The mindset of government has also been very, very positive. I mentioned the setting up of the digital public infrastructure. That's happening both on the fintech side, on the agri side. There's a lot of open standards that are happening, which are permitting agri lending as well. Government has proposed 3 centers of excellence on the artificial intelligence and setting up of top educational institutions. Of course, challenges do still remain. There are frauds that are happening in lending and digital payments. We've recently witnessed 94 digital lending apps, which have been banned by MeitY. As per RBI in FY 2023, the total number of fraud cases in banking systems were 13,530, of which almost 49% were in the digital payment space. There's privacy concerns on data. There's gap in the credit access to the MSME segment or to the new to credit customers. And that's been highlighted regularly. The MSMEs face a credit gap of almost 20 to 25 lakh crores. So we have a very diverse members from the BFSI industry, and happy to discuss ways for improving credit flow through new digital credit models, challenges in adopting cloud computing and blockchain, the likely impact of central bank digital currencies on digital lending. Looking forward to hearing their views. First up, I'd like to invite Mr. Ryan Malhotra. He's a reputable businessman and a successful serial entrepreneur and a very charismatic influencer who has a talent for growing startups and developing original products. He previously ran a popular YouTube channel where he discussed technology before entering the world of entrepreneurship. He's currently at a position of founder and CEO of Neo Infinity, a fintech in the business of well-known innovative banking and payment solutions. He's received praise for his entrepreneurial prowess from the RBI as well. So Ryan, I would like to ask you first, what are the current trends in digital lending to MSMEs, and how are these expected to evolve over the near future? Ryan?
Yeah, I can hear you. Thank you so much for the warm introduction. Yeah. And when you were mentioning the stats that you were mentioning, there was one stat that was shared in that report as well, which was that I think 40% in the MSME sector per se, 40% of lending is still in the informal sector. So there is that gap as well. Having said that, the 2-3 biggest things I see, biggest changes I see, number one is the increase in the adoption of alternative data. To be able to give credit. So earlier, this was the biggest problem wherein many people did not have access to credit with the fact that they did not have the supplementary document or the traditional financial collateral to offer. And now what we see is that people are using revenue-based financing is there. There are alternate data sources that are out there. There are bank statements that could be shared. I think that is one trend. Even what BharatPay does with their merchants, etc. So I think, and even for Gen Z population, I see a lot of social media trends, social media following and social media verification, also as a way to give people loans. So the increased adoption of alternate data is number one thing I see. The other thing that is there is, as you rightly said, there is a lot of smartphone and data penetration now happening. Now, with that, we see a lot of mobile first and digital first products upcoming. We also have someone from Per Annum here, and I think P2P, peer-to-peer lending has also played an important role. This has been a recent trend where now individuals and institutions can also lend money to other MSMEs or individuals as well, plus a rise of BNPL. So these are 2, 3, 4 things that I see, which have been the recent trends in the industry.
Perfect.
And I think going forward, one thing will be the stat that I mentioned about the alternate data and the informal lending, that currently BNPL and lending and even MSME lending is a very it's slightly an urban product in its reach. I see this going into tier 2 cities. I see this going into rural India as well. And apart from that, some new forms and new types of products will emerge. Specific to an MSME standpoint, maybe something that is tailor-made for their business model, or something that, for example, we now have invoice discounting, which is emerging. We have alternate investment AIFs now also, pumping in money into different collaterals or different types of businesses. And lastly, what I feel is that fintechs per se and lenders per se will play a more cohesive role. Like they will be offering much more than just the lending services. Everyone will try to be a super lending app. So tomorrow, let's say a company like Khata Book, they might start, adding a credit line to their customers. Or a company like Paytm, which is a payment gateway, or Razorpay, who's a payment gateway, they might start adding those credit lines, and we are seeing that already. I think there will be emergence of new types of products. There will be access to new kind of customers, rural as well as tier 3 to tier 2 cities, and there will be some sort of integration into other financial services as well, apart from lending.
Perfect, Ryan. I think you've rightly spoken about use of alternative data. I could capture the innovation in new products that you've rightly spoken about. And it's not just lending. There's extension of other financial services that will also happen via the digital means. Any thoughts on alternative data, especially for new to credit customers? What trends are you seeing there?
Right. So just incidentally, we actually had a product called Slaypay, which we launched. It was supposed to be a credit builder product for new to credit customers only. And initially, what we were doing is we were making customers invest into different assets, P2P investment, mutual funds, etc. And we would be giving them a card against that. So this card will help. It was asset-backed lending, and then RBI had certain guidelines. So now we switched to an FD-backed credit card. The point I'm making is with new to credit customers, there is already a secured credit card option available, or a secured lending option, which even LAS, loan against security, is something that government is promoting more. So those options are available. At the same time, for Gen Zs and with the rise of influencers and rise of social media and other things, I do see that social media following that could play a role. Your ability to earn in future, those things could also play a role. So secured lending, LAS, and social media, I think those 2-3 things are there. For MSMEs per se, invoice discounting will play a big role. Asset-backed lending is something that is taking up, what Grip is doing, what certain other platforms are doing. So I think those couple of things will blow up in the future.
Perfect. Thank you. Thank you so much, Ryan. And I'll come back to you with more questions. Now, I'd like to introduce Mr. Vinod Singh. At this point of time, Vinod is a well-known tech visionary and a market leader with a distinguished career spanning over 2 decades. With experience in e-commerce, the Internet of Things, and fintech, he has repeatedly shown his exceptional capabilities. Vinod has a wealth of experience and significant leadership roles. He has held CTO positions and is currently CTO for Conicorus Limited, a reputable insurance software business with headquarters in UK in the insurance industry. Vinod, I'd like to ask you, in what ways does the lack of extensive credit histories for MSMEs complicate the risk assessment? A question that I was also earlier asking Ryan. And what innovative approaches are being adopted to ameliorate this challenge? Vinod, if you could unmute yourself.
Oh, sorry. Yeah, thank you for having me here, Praveen. So yeah, I think I would probably add up what Ryan has said already, sort of in terms of the innovation and everything going on. But I think we'll have to think about the impact of the traditional. I was doing some research, and it was fascinating to find out that there were like 41%, MSMEs across the world who are in need of the funding, who have some sort of eligibility somewhere and lot, but they are being like cut out by the traditional lending and traditional like credit risk assessment process. And that gap is roughly, I guess, $5+ trillion of the gap, the supply demand gap. So the space is quite big. The opportunities are really amazing, like massive opportunities in terms of filling that gap that is needed. And in terms of, and if you look at the traditional, it's more of like you need the collateral, or you need some like good amount of financial history, or you need like and there is this whole taboo around this whole like bigger or traditional lenders. They're like, if you're a small SME, like an MSME and a startup or something, by default, they will start thinking you're bad, like there is a higher risk on you. So that's also a mentality change that needs to happen. I mean, like no matter how many, and I have gone through this in insurance industry, if you go and talk to underwriters who have been doing it for 50 years, no matter how many AI and machine learning and analytics that you give them and tell them that actually this risk that you're insuring is not as bad as you think, They're like, yeah, I know, I've been doing it for 30 years. So I think for me, the biggest challenge is not the evolution of technology. It's the kind of mindset of the people who are like, doing this, for them to somehow be ready to accept that they might be wrong. Their thought process was wrong. And the technology and data that is telling, I need to kind of change my view. And it's for anybody, it's a very huge ask. Like even for me, if you ask me to, can you agree that you are wrong? I will like, let me try first to prove that I'm right. And then I'll probably like try to see like, so to me, that's the massive challenge that I've seen in terms of, this breaking this thing and helping all these technology and innovations and alternative data and all to really help. Good news is that all these new startups or all the companies that we have, all the panelists here as well. Good news is they don't come with that mindset. At least this generation of the companies, they come up with the open mind. They believe in the data. So we see that trend is going positive. And I sincerely hope that there will be a point when all these traditional lenders will have no choice but to kind of adopt these challenger, like whether you call it challenger bank or challenger lender, there will be a point. I don't think we are far away from the point where there will be no option. So for me, I would say that innovation, I think already Ryan has already spoken about like all the different data that you can use, social media, mobile app, and things. One thing that I would also like to mention is when we started Considerus, my company in insurance, we came up with the hypothesis, which took us 8 years to prove. That's a different story. It's saying we thought behavior is the better indicator of risk. That was our premise to start this company. It's saying if you have an ability to capture the data and then use sophisticated technology to extract the behavior of the asset that you're insuring, it will give you much better risk profile and risk visibility than your traditional method of, let's say, if you go to car insurance, what is the model? When did you buy it? Where do you live? It has nothing to do with kind of an actual risk profile. These are all proxy. Same goes with like health insurance. Do you smoke? I can fill anything that I want to be, because if my wife doesn't know that I smoke, I'm not going to fill yes in that form. But all these like smart devices now, you don't have to ask. So the point, I think what we did in like we've been successfully be able to do it is now bring the behavior of this asset and use that to process the risk. And I strongly believe that this lending thing needs to like probably like all the innovation needs to go around that. I want to assess the behavior of this person or this company that I'm going to lend. And I'm going to assess, is that behavior correlated with the default risk or not? And then I'm going to decide. So that would be my sort of thought process.
Perfect. And I think you rightly said that objectivity in decision making, data driven decision making. In data we trust, that's got to be the mantra and the model going forward. But I mean, having said that, and as much as we should rely on data, would you also say it also raises privacy concerns? So when you were pointing to your watch and the data that it's capturing about me health-wise, and where is that data going? What would be your thoughts on the privacy concerns around that?
It is. So there are two aspects of it. One, I think I've been a technology like entrepreneur, like saying we take that as a cost overhead. So I think any investment, for example, it took me lots of time with my board, for example, and it's a mentality. I think I'm sure all the company will have the same thing. Like if you are saying, I want to invest, I don't know, like $100,000 into cybersecurity measures to make sure that my data is secure and everything else, you get a bit of, you have to do hard work to prove to kind of get that sort of funding from the kind of people, whether you're investors and all. And it's because it is taken as an overhead. So for me, that problem, because all of us, there are two things. One is we all know that there's nothing private in this world today. Privacy is an illusion. Reality is that privacy is an illusion. And sometimes the problem is we don't have anything to do. We can't do it. It's out of our control to maintain our privacy, right? So that's kind of one statement I want to make is like privacy is an illusion. But in order to build the trust with your consumers and everything else, you have to change the mindset around this whole data privacy, like coaching your staff, investing into the whole privacy and kind of things, you have to stop taking it as a cost or overhead. You have to take it as a kind of investment. And that's the major mindset that we have to make sure that we instill into the companies. Because once you genuinely start to care about that, I'm going to invest, I don't know, $1 million into this privacy and this setup and everything else, because I genuinely care about building the transparency and the trust with my consumers so that they don't feel scared to share the data. So I think that's the only way. Otherwise, I do not see any other way to kind of break this sort of barrier around the privacy and privacy concerns.
Totally with you. Having said that, we've just seen the news on the data from Aadhaar going on dark web, and it's scary, right? It is scary at the same time, you know. I mean, there's an elderly generation which may not be that tech savvy, and you know how the frauds happen that way as well. Totally with you on that. I'll of course come to you with more questions. At this
I just
point,
had one point, Praveen.
Go ahead.
It is on a lighter note that Vinod, I think, is the king of one-liners. He gave two gems. One is privacy as an illusion, and second is behavior is the better indicator of risk. So I'm going to use that one in some product or some video that we make.
Perfect. I'd like to introduce Bhuvan. Bhuvan is a mergers and acquisition professional turned fintech entrepreneur and is now trying to revolutionize the alternate finance space in India. He's co-founder. He's co-founder and CEO at Per Annum and Lendbox, a Forbes Asia 30 under 30, and a TEDx speaker as well. Bhuvan, I'd like to ask you, India's open credit enablement network, which facilitates a more standardized and simplified process for accessing credit, what sort of changes do you expect through Open?
Yeah, thank you for having me. So Oken, I think, is still in very early stages of its development. Firstly, we have to remember that it's a set of standards, not a process or not a guideline, or so to speak, or not, it's basically they're not rules which somebody has to follow. It's a set of standards which you may choose and you may choose not to follow. Right, that is one. Secondly, see, the intention is great. I feel that if everyone follows Oken, which I feel will take a long period of time, because the amount of work which you need, all fintechs, all NBFCs, and especially all banks, which are the most lethargic in nature and bureaucratic in nature, to devise their APIs according to Oken. I think that is the biggest challenge which I feel. However, if let's say tomorrow in a dream scenario everyone follows those guidelines, then I feel it will make the flow of credit information and all kinds of data points extremely smooth and fluid. For example, I mean, we then lending to even the 40% unorganized sector, in the 40% unorganized MSME lending might become maybe just 5% if Oken is implemented in the right way, right? And if we are able to, we may not need as many alternate data points as currently exist, because the vision for Oken is that Aadhaar, GST, any kind of government interaction which you have should be within the same ecosystem, and then ideally all information should flow seamlessly across different stakeholders. That's the vision for Oken in the most broadest of terms. So if we're able to design our APIs right now, the other thing is that everyone considers integration and tech know-how and API integration as a competitive advantage as well, that I am integrated with these people. I'll give an example which Ryan also mentioned, like Khatabook actually does lending to its merchants. We do it with them. So we lend to Khatabook's merchants and it's for us now, it's a competitive advantage that we've already integrated with them. We have consumed all their data. We know their merchants very well. We know their repayment history, their transaction history over the past 2 years, and so on. Obviously, something like Oken aims to decentralize that, where everyone can immediately has access to all APIs and can integrate accordingly, and so on and so forth. So obviously, again, forcing startups and NBFCs and fintechs and banks to be on the same page will take a long period of time. It took CKYC a very long period of time to get implemented. I don't think it's still properly implemented, although the vision behind CKYC is fantastic. That centralized repository of data, but it's still not very well integrated. Getting the regulator to properly understand how Open is supposed to function, that is also a big challenge, which I feel. I think it will take some amount of time, and maybe at some point of brute force implementation by the regulators and maybe by the government to actually make it happen. Then innovation, we as startups will also have to think of different ways to innovate our products to have a advantage. So yeah, those are the things I feel need to change over the next few years for something like this to be implemented in a country like India, where still data is not entirely readily available. Some things are tech-enabled, some things are not tech-enabled, and so on and so forth. Yeah.
Perfect. I think what I'm hearing there is the intent is right. The protocol, I guess Open is more like a protocol, and all those standards the standards are getting developed. So, but the runway is a long runway. It'll still take time to get that adoption going. I'm sure. I mean, it's been spoken of as the UPI moment on lending. Your thoughts on that?
Exactly.
I mean,
no, absolutely. I agree. If it can be implemented in that way, then it can become a UPI moment. Like UPI basically completely destroyed wallets. Paytm's go-to thing was that, oh, UPI, I mean, we are a wallet system, Paytm kar do. Abhi bhi log bolte hain Paytm kar do, but they're using UPI. Yeah. So it has become a verb more than anything else, and the company in itself is not profitable, regardless of people saying Paytm kar do, right? So I absolutely agree that if and when Open can get implemented with the intent that it is supposed to be implemented, then it can actually be a UPI moment for digital lending. I mean, imagine an MSME which today maybe the proprietor has an Aadhaar card, has a PAN card, and everything, and so on and so forth, right? But a bank or an NBFC is not able to get access to that data or their return, or whatever the case may be. But with Open and with everyone having a standardized protocol and with data being shared seamlessly, that guy might be able to get offers from 10 different banks now, because everyone has the data readily available with them in an understandable format and a standardized format. Today, I will be assessing the same set of data points as another digital lender who will be assessing the same set of data. Then it's just competing on the rate and the kind of product which we can offer them. So I do feel that it can be a UPI kind of moment. I genuinely feel that it requires some amount of time and implementation for it to happen. So execution will be a challenge. The idea is great. That's what
and the choice then will move to the consumer, to the borrower.
Exactly.
Understood. Ryan, I'd like to come back to you. As digital lending platforms have increasingly adopted innovative credit models like BNPL, what potential challenges and risks associated with these new financing structures do you envisage, and how do you sense they can be mitigated?
So BNPL at one point became the boogeyman of fintech. It was it was akin to, let's say, crypto at one point of time. And even though, even in the Western, see, the bigger issue, and this is digressing a bit, but the bigger issue is that sometimes what we do is something that works in a country like Europe, any country in Europe, we just try to copy and paste it in a very big and very complex land geography and think that it'll work. But what we forget is that there is a lot of customer awareness and education that needs to be there. Having said that, of course, BNPL as again, just like what I won't say the things as controversial as Bhuvan says. He names names. I won't do that. But BNPL has, for like any other traditional credit instrument, has its own set of risks. So the first risk, obviously, is because it's so convenient. People will overuse it. People will get there's a risk of overdebting customers. And the other thing is that, which happened to one of the bigger an educational platform in India, what they were doing is they were giving out a BNPL product or loan to the students, and students didn't even know that they are getting the loans, not naming anyone. It was a thing in the news. So again, so first is that customer will use it knowingly. The second thing is that customer is getting charged unknowingly. And then there is the pricing part, right? Wherein so in case of a credit card, you generally know what you are paying. But in case of BNPL, there are so many other fees, and there are things in the terms and condition panels that we hide and check boxes that we take, etc. So all those things are there. But those are things that are there with any other credit piece. The difference, however, is that most other credit pieces may be a personal loan or maybe an overdraft or maybe a credit card. They have been there for a while. So the regulations there have matured. With BNPL, there have been attempts to make regulations, but there is no such thing as a regulation, which can be used concretely. Disabling it is not the right kind of regulation, and letting it roam freely is also not the right kind of regulation. So I think that has also been there. And then of course there is the fraud and other things, but I think is with any other fintech app, you are susceptible to those things. Having said that, now taking the cue from whatever I've said so far, to mitigate this risk, number one is that we need to educate the customers that what a BNPL product is, how is it going to affect your credit score, what a credit score is. There is this very famous study or a stat which says only 20 to 24% Indians are financially literate. Now, in that kind of a country, if you're doing some sort of embedding of BNPL service into selling of products, that obviously it's not the most righteous thing to do. Having said that, even companies need to be responsible, because at the end of the day, if you're increasing the debt of a customer, your risk of defaults also increase. There is no point of overdebting people who can't pay it back. And lastly, I think the regulators have to soon come up with some concrete guidelines that India is a credit hungry country. India is a growing economy. Till up to 2 years back, I used to say there are less than 6 crore credit cards in the country. Today there are 9 crore credit cards. It's going to hit it has increased so fast. In 2-3 years, you've seen so much credit cards being out there. So point is that BNPL is another form of accessible credit. It just needs to be there needs to be regulation that makes sure that people get the best out of it and avoid the worst out of it. So this is one industry as a fintech entrepreneur I'm saying, please regulate so that we know what to do with it, and it should not be the taboo word that it has become today.
I think this is fast turning out to be a webinar of one-liners. What was that? The worst and the best? I mean, if you could repeat that.
Which one?
I think the get the best out of it and avoid the worst out of it. I really love that line. Thank you for sharing those views and very, very pertinent points. I think the point on customer education, I think that is so important, and unknowingly getting into the debt trap. I mean, that can be really, really disasterful for a new to credit customer. That can really impact the borrower first time. So I really appreciate your comments. Vinod, I'd like to ask you, on the adoption of cloud computing and blockchain, given your technology background, and how it is expected to revolutionize the digital lending space. Vinod?
Right. All right. So I think there is some unfortunate situation here, especially with the blockchain. It's like taking one nicest things that was developed and making it so corrupt and so ugly that it has lost this kind of thing. So like it was just such an interesting technology. It's like, like distributed ledger, you can kill all the middleman, safest, secure, and but then it turned out to be a major to fraud. Crypto, like blockchain equal to crypto. Like if you go and ask, I would probably 80% of people would say blockchain equal to crypto, which is like crypto is probably, I don't know, like 2% of the kind of capability that blockchain can do. So, but my point is that blockchain does hold a lot of potential in this space because it's all about transparency and trust. And I think the whole purpose of this whole blockchain side is around providing that transparency and trust. But the industry has to deal with that side effect of all the misuse that has been happened, with the blockchain. It's not going to go easy. We have to be aware that it's a battle that we have to win. Another one is obviously there are lots of drawbacks that comes with not drawbacks, but challenges that comes with the blockchain around the scalability, the cost of implementing it. And the biggest problem that I see is that, so I started doing some sort of angel investment for some time. Once I did my exit last year, so I had some money. I would receive all these kind of pitch decks, and it will say, transforming this with the blockchain. Okay. And then you go try to interpret what exactly you're trying to do blockchain. What you find is that I have decided to use blockchain, and then I'm going to figure out how best I'm going to apply it to my application. I'm like, that's not the way to do. So we have to sort of change the mindset as well. It's saying like blockchain is good, but you cannot inject blockchain in every single thing and it becomes nice. So that's sort of a thing we need to be careful. And if we are planning to adopt any company, if you're planning to adopt the real use of the blockchain, be ready to face those challenges that it's not your fault, but people have really polluted it. So be ready to face that and make sure that you're ready for the challenges. Cloud computing, it's a pretty good thing. I think there are two things that people need to keep in mind. If you leveraging the cloud computing, it is a kind of a blessing, I would say. But it comes with it's like when you get married, there are lots of good things that you get, and then there's some certain things you get that you have to make sure you deal with. So cloud is like a huge amount of good things. But I hope my wife is not listening to this webinar. And but the privacy, the security. So if you are on a cloud, you have to make sure that you play a very different attention to the cloud control of security. Another one is cost, and it goes both ways. It's very cheaper. It makes it affordable, but if you don't really have a strong governance and a strong sort of things into cloud, by the time you realize the cost will be out of your hand. And I'm a self-victim. I come from AWS. I leave everything else, but as a founder and I was focusing somewhere else. We started with like 5,000 AWS monthly bill, and then 1 month I realized that we paid $250,000 monthly bill. I'm like, what the hell? What happened? And I found that it's because it is very easy to spin up the machine and keep things running. So I would say I'd only advise two things around the cloud that make sure that you have a really hard stick on the kind of cost control and the security.
Perfect. Unfortunately, I have to remind you, Vinod, that this session is being recorded, and will be posted on YouTube.
Yeah, I'm in trouble.
Perfect. No, thank you. I'll come back to you with more questions. Bhuvan, quickly, I'd like to ask you on central bank digital currencies and how might their introduction and integration into the financial ecosystem impact digital lending practices?
So it goes in line with your previous question to Vinod, actually, that let's see, like if blockchain, it's obviously CBDC will be blockchain based. There's no other way for a digital currency to function. So yeah, data will be much more secure and readily available. I feel something like a CBDC is a lender's dream if we have the information, if all the information is made available and it's controlled properly, because then you can track the exact movement of the cash which the guy is saying or the borrower is saying he has. So I feel, again, it goes to my point with Oken as well, that I don't know when it will properly happen, especially in a country like India where supposedly the parallel economy is almost more than half as big as the recorded or the white economy, so to speak. But yeah, I feel that it can definitely make things again much better and much more clearer. Decision making can be much faster if your borrower is basically working with CBDC rather than, or a mix of CBDC and actual currency. Then with CBDC, the source, the movement of funds, where it's going, how it's come, everything can be so easily and readily available. We still don't know how the central bank is actually, how basically RBI is going to actually implement and the information sharing around CBDC. We don't know that. It's still not fairly clear. But supposing that yes, then the information sharing around CBDC becomes more clear with the bank, obviously based on borrower's consent and permission, then it's a dream come true for any lender, that if you have so much information about the financial activity of a borrower, then it definitely will make the entire decision making process much more smoother and faster as well. And even for a borrower, it just become he has to share less information as opposed to what he has to do traditionally. But like I said again, when it comes to Open as well, that I feel CBDC it's in general globally, not just in India. In fact, it's going to take some time for enough adoption that it reaches critical mass, that it starts being used by financial institutions and lenders overall. As of now, it's a great tool that yes, it's being tested and it's still in a sandbox stage, I would say. So I think there's still some time to go, but let's hope and pray that it happens pretty soon, sooner rather than later. Yeah.
Perfect, perfect. I have an interesting audience question. Anyone who can take this. How can you help small MSMEs to save their money from retail seller customers through debtor bill discounting? How can you help?
Sorry,
how can you
what's the
help
question again?
MSMEs save their money from retail seller customers through debtor bill discounting? I guess they're talking about bill discounting and what could be the solutions from an MSME standpoint.
How to save money on bill discounting? Is that the question?
Yeah, it seems like that. Yeah.
Oh, okay.
You want to take that,
just,
or Ryan? Ryan?
I think it just relies on the who's on the other side.
Bhuvan is the right person. He lends to businesses, right? He has a P2P platform.
Yeah, I think, the only way you can save money when you're borrowing in any manner is the rate at which you're taking the loan. So I guess the quality of the invoice, basically from where the invoice, whom the invoice has been raised to by the MSME. If it's a captive customer or just a one-off customer, the quality of it, and obviously the financial standing of the MSME itself, and the customer on the other side to whom the invoice has been raised. I feel that is the only way you can actually save money, negotiate, get a better rate on the invoice which you're discounting. And obviously your own history of how many invoices if you're doing it for the first time, obviously you won't get a favorable rate. But maybe if you're doing it on a regular basis with the same lender, then you have much higher chances of getting a very favorable rate. So you have to build a history basically, and also have good quality. I know it's a very traditional way to think and goes maybe against of what Vinod was saying, that we should also look at behavior. But given that it's a short-term loan, we may have to look more at traditional data points. So yeah, that's how I feel. If we've judged the question correctly, then that's the only way you can save money.
Perfect. Ryan, any thoughts on role of traditional banks and how it will evolve with digital lending and banking coming into existence and growing?
So, as I said, I don't want to make it controversial like Bhuvan does. He wears it on the sleeve. I, tread cautiously, but I'll tell you. So we extensively work with banks, and I've extensively worked with a lot of banks. And I'll share a small anecdote of a different product, and I'll link it back to this. So there was a time where every third fintech in this country was a neobank, right? And so as Bhuvan is also a funded company, and I'm sure Vinod was also trying angel investing. Once you have a fintech startup, your investors come to you for advice. Like, I have a fintech startup in my, I'm looking to get a fintech in my portfolio who's into neo banking. What is your view on it? So I think in that one particular year, I got about 100. I saw about 100 decks of different types of neobanks. So there were neobanks. Then there were neobanks for blue collar, neobanks for white collar, neobanks for women, neobanks for children, neobanks for everyone. It was, and I was telling my investors that so you as a founder, you know where ballooning is happening, or where where trends are being inflated, etc. And the other thing is, some people also, some investors just wanted to have that as a badge of honor. Oh, I have a neobank in my portfolio. Anyway, so my answer to that was, I said, guys, what is a neobank? A neobank in India is a wrapper around an existing bank. So I can name a few banks. This is fine. So an Equita small finance bank in which you are never supposed to open an account because you have the option to open it in any other bank. Possibly you can do it in Kotak, SBI, HDFC. You will, because there is a XYZ partner offering that because they are giving you extra rewards out of their burn money, because they are discounting you on forex transactions, because they are making a better UI with cats and dogs on it. You'll open an account. Now, I had a fundamental issue with this. I said, see, if this works, so this is a test being done where bank is saying, okay, use my APIs, do a few customers. If it works, what banks will do is they'll hire a product team, a designing team, and a tech team, and say, let's build it ourselves. And I told it to all but again, some investors did not listen. Today, there are only one or two neobanks that are there in the market. There's an orange one, and then there is a blue one. You guys know which ones. Orange one is the one which is now they've got a very good GTM. They are doing employee benefits and other things. And the blue one is kind of hanging there. It's been there for a while. It also rhymes with the company that I represent. Anyway, so these barring these two banks, where are all the women and the children and other neobanks? They are not there. So banks are slow. See, bank is a big animal, and it takes time to move. But if you look at the World Cup thing going on, IndusInd Bank is now there. You have instant account opening with 7% returns. You've got a Kotak 811 where Ranveer Singh is telling you to open an account. So now bank is the neobank. So what banks have is they have their own variants, which is traditional banking for the Gen X or boomers, and then they've got a Gen Z kind of an account. So bank itself is a neobank. So coming back to, sorry, it's a long answer, but coming back to your particular question, I see it going only in two ways. It will either end in collaboration, whereas your vanilla answer, where we will see banks working together with fintechs and creating different solutions and roses and cherries and all that. Or once fintechs are done with it, banks will see that okay, so these fintechs have developed the alternate sources of data, for me to evaluate. Okay, P2P is doing well now. 2-3 years later, it's now regulated. Okay, once things stabilize, it's like what Apple does. Sab kar lo apna wireless charging, sab kuch kar lo. Then once it is safe enough to do, then I'll do it. So then there will be certain banks which will say, okay, cool, this is a good business. Let's put in 100, 200 crores and whatever. I'm not even kidding. I'm sharing one more anecdote here. Sorry to extend it further. The blue neo bank, which I was talking about, the main bank called me and said, why don't you open an account in my bank? The bank which was backing that startup, they gave me a call. Hamare mein khulwa lo, hum zyada safe hain. The point I'm making is, so banks, see, it's a capitalist world. So banks know where the money is. So I think for the next few years, it will be all collaboration. And once banks have figured it out, they'll, either get these people from the startups to join their bank or build their own teams. And then you'll see mass competition going on in this area. That is what I personally think.
Makes perfect sense. I totally resonate with that part. Vinod, a quick question to you. With growing reliance on data-driven decision making in lending, what should financial institutions do for ethical use of customer data? Data privacy and security that we were talking about, and how also to avoid biases. That's an oft-repeated theme with AI.
No, that's fine. I think that's a good question because I've been asked to talk on this whole, there's a new chat GPT, Bard and all those kind of things. And I've been invited to talk on this special topic for around 10 times in the last 3 months. And my thinking is so there are two parts of the question. In terms of ethically, I would connect back to, again, is saying that it has to start from the top. So if you are like a top guy on a bank or lending solution, blue or orange or whatever color you are, if the top guy does not sincerely believe in the ethical use of the data, then it doesn't matter. It will not happen. So I think it's not a technology question. It's more of a mentality question. And unfortunately, in the current world, it's very hard to find people who actually genuinely believe in that whole ethical use of the data. And I can name here, maybe Google can sue me, but talk about Google, Facebook, all these big giant $1 billion, $1 trillion company. are they even being able to ethically use the data? No, they are like monetizing everything. So I would say that's the biggest challenge. Unfortunately, I don't have any answer other than saying that the whole mentality needs to change. Otherwise, no matter what technology that you bring, nothing will happen. That's one. On the on this side of bias and all, I would say everything like every blessing has a curse, or like sikke ke do pehlu hote hain and all that is. So the amount of data that we are generating, the only reason we are able to process that data or even plan or like dare to do something with it, because we now have got commodity hardware through cloud computing. So it's not like paying $300 or $3,000 to get a small disk back in 90s or whatever that is. So it became a commodity. So it's easy to store all the data. And then whole machine learning and AI and machine learning, which used to be a university and academic kind of a thing, is again become a commodity. We are now living in a world where you don't actually need a machine learning scientist or data scientist to apply a machine learning or AI into your normal business application, like in the real world of AI, not the academic one. But one thing that people forget about it, and I had lots of mathematicians and people from Oxford as well, is saying, look, if you want to have accuracy in your machine learning decisions, you have to go with the non-linear regression model, which is like deep learning and whatever, random forest, neural networks and all that. Mathematically, there are only two types of regression. One is linear regression and there are non-linear regression. As you go into the deeper and deeper sort of side of AI, you're going into the non-linear regression of the mathematically. And by its definition, there is no way to track the result from the source if you're using non-linear regression. It's a myth. It's like if you are using a deep learning algorithm that is giving you some answers, you can guess, you can have some sort of a proxy of explaining why it is doing what it is doing, but the reality is you will never have that. So that's something people have to keep in mind, that it's good. It's not a bad thing, but it's just that accepting that I may not be able to explain it completely. That's one. And then I would probably add a governance layer. So I never advise anybody, including my own company, to have AI fully automated. Always have human in loop. We may, in 10 years from now, we may find a way that does not require the human in loop, but I can guarantee you that today where we're sitting, no matter how sophisticated people are using AI, anything, you need human in loop to avoid some of these hallucinations, biasness. It's a machine, so that's how I would conclude my answer on that.
Perfect. Thank you. Bhuvan, a quick word from your side on customer data privacy concerns and how they can be addressed in a digital banking ecosystem.
Yeah, I mean, I agree that it's definitely a massive pain point when it comes to all the stakeholders, especially the regulator, and also primarily the people whose information is actually floating around. And you mentioned rightly a while ago that there is a massive generation which is not educated, whether it be the elderly or people in tier 2, tier 3 cities, and they don't know what data is being floated around. They get a random message. They think they have to give the OTP to that person without even realizing that their money is going out. It's really unfortunate, the kind of frauds which happen. I mean, I feel the number of frauds which you mentioned, that those are just reported. There is a much larger number which are not even reported, unfortunately, within the digital banking ecosystem. I think so. The way, obviously, there has to be very, very stringent regulation and supervision by the regulator when it comes to all companies within the digital banking ecosystem, whether it be the banks themselves, the fintechs, the loan service providers, and so on and so forth, who has access to that information within each company as well. So we, for example, have put in very stringent guardrails as to who can see what information for a user, and nobody has super user access, that they can see everything for each and every user. You have to have that, because you don't know, right, where and when information might be leaked. And the kind, right. So lastly, obviously the information. For example, the central bank did a very smart thing where they said keep all information, whether if it's on the cloud, for any Indian company, should be within Indian servers. I mean, even though it might seem like a like a bureaucratic thing, but I don't think so, because I think it's a very smart thing to do, that all the information is within Indian borders, physically as well, not just digitally. So that really, I feel like little things like that by the regulator, UIDAI, that nobody should, Aadhaar should be masked. If even if it's being viewed internally, that is also a very smart thing to do, because Aadhaar data is extremely sensitive data. They literally, it has become the new identity now in this day and age. So uh, I think all players within themselves are working very hard, including the regulator and all the stakeholders, including the panelists here, working very hard to make sure that user data is as protected as it is. But I think education also has a major part to play in it, where the customer itself is not educated as to whom to give what kind of information can be misused, what cannot be misused. There are cases where people, like, I mean, today we get even information, we get SMSs even from courier companies that please don't give out OTPs, right? So the it's just the information which is out there. So if you're giving out an OTP, that means somebody who's asking for your OTP already has certain information about you, that he can go to the extent of asking you for your OTP, which means maybe he already has your bank account details and your debit card details and so on and so forth. So we all have to work very hard, even though to make sure that such information, even if it's out there, is the customer is aware that they are not supposed to fall prey to it. I mean, there are series on OTT platforms which are designed entirely around information being leaked, and and people misusing that information on very vulnerable customers, which are not even aware as to what can or cannot happen with the information they have. And that's why so many users end up being averse to digital banking and averse to digital mediums of finance, because they're like, "Nahi yaar, I heard about this person getting defrauded of these many lakhs. I am not going to use UPI only. I don't want to do it." Right? Which should not be the case, ideally, right? I mean, we need to make sure that you should not just put your UPI pin without reading or without knowing where it's being put, rather than just putting it. If somebody calls you, asks for an OTP, don't just give it out. If a delivery guy asks you for an OTP, don't give it out. And, like, if somebody calls you that your KYC is expired, you must log into this link and give your OTP. Don't do that unless you have to, unless it's a bank, or go to your branch and do that. So I think the first biggest challenge is education. But when it comes to the concerns being addressed within stakeholders, I think the banks are doing a great job. The regulator is doing a fantastic job, or trying to do a fantastic job. It's just that the sophistication of frauds is also increasing at a faster pace, as opposed to how fast the regulator and the enforcement agencies can even learn and understand them. So I think, again, with any new product or any new technology, these are teething issues as of now when it comes to data privacy. I also do agree with Vinod, to be very honest, that privacy is definitely an illusion at the end of the day. You may think, I mean, we all willingly roam around with a smartphone. We all willingly have a smartwatch. We understand that the manufacturers of these companies will say that a lot of this information is stored only on the device. Your WhatsApp messages are encrypted, and so on and so forth. But we all suspect at the back of our mind, ki, yaar, ye kaise pata lag gaya in log ko? How am I getting this ad? What is happening exactly, right? And which is what Vinod actually mentioned, ki, we don't know how exactly our data being used, including our searches and so on and so forth. So so I think within the banking ecosystem, a lot of concerns are being addressed, but including educating the user on day in and day out. We are sending out notifications to our users: please don't give this information or this gift. Nobody from the company will ask you for this information, so on and so forth. But again, people do fall prey to frauds, right? And we can protect information as much as possible. A lot of times people don't even know what they're consenting to. They just consent to it. So then a third party can come, ki yaar, aapne to, you said yes, so I gave out this information or sold this information. I'm just here to make money. So a lot of education is required. That is the first biggest concern which needs to be addressed. I think within the regulatory framework, there's enough regulation, if properly implemented and supervised, to make sure that the information stays protected of each and every user. But again, we all as lenders also need access to information to give out loans. So user has to consent to a lot of information to be given out at the end of the day if they want to get a loan at a competitive rate. So beyond a point, you also can't hold your information close to you. You have to let your information be out there. I mean, every day, I'm sure all of us get calls that there's a loan available on your car, you are eligible for a credit card. So that means our credit history, which is something which we all, I'm sure, hold very personal, is out there, right? That how do they? I mean, something so personal to all of us that they know how I'm repaying and everything, that I'm eligible for so many things is out there. So again, it is definitely an illusion. You just have to make sure that it doesn't go out to any uh, unwanted and antisocial elements as much as possible. But yeah, let's see. I mean, that's why although the 94 Chinese apps which you mentioned were banned, the biggest concern was data privacy. And predatory lending was the other second biggest concern. These two are the biggest concern. So yeah, I mean, we are all trying to be on top of it, including the regulators. But yeah, sometimes we are catching up, sometimes we are ahead, and it's a forever evolving process, and that's part of technology and innovation, I feel.
Perfect, perfect. I'm conscious of time. Any closing thoughts, Ryan? Ryan?
No, on the monologue that Bhuvan gave, I just had one point. So in any of the apps, any of the payment apps I've developed, the biggest drop is when you ask the customer his PAN card or his Aadhaar card. Like it's the biggest drop. And just to add to what Vinod, the gem that Vinod gave us, that privacy is an illusion. This customer won't give me a PAN card, which is a regulated platform, which is DigiLocker enabled and all that, and I don't store it. But this customer would go to a 5-star, give his Aadhaar card, or any hotel, Oyo se lekar Taj tak, he'll give his Aadhaar card for the guy to copy and then put it on a pile. He has I'm always wondering that why. So when he says about customer awareness, अच्छा, किसी भी hotel में there is no other alternative to check in. By the way, you give
Yes.
your Aadhaar card, they copy it or they take a photo and they
Yes.
keep it with themselves. And so my point here being that, especially for the privacy part, I think in some cases I just feel that don't they see it? Like there are people who just use iPhones, giving that excuse that I don't like Androids, it has a privacy concern. But you go to a mall to buy a grocery and then वो क्लब महिंद्रा वाले का फॉर्म भर देते हो, उसको नंबर भी दे देते हो, एज भी दे देते हो, आईडी भी दे देते हो. So yeah, it's a very complex world out there.
Yeah.
Perfect, perfect. Vinod, any last word from your side?
No, I think I would just try to conclude that yes, there is a challenge, but I think that's how any evolution work is. Like new thing comes in, you try to do it, there will be some misuse, then you'll figure out a way to like sort that, and that's how the whole civilization has evolved. And I have full faith that the whole thing will also evolve in a way that all the history has been. So I have a positive outlook in terms of where the future is going.
Perfect. I think there can be no better way than to end on a positive outlook note. I want to thank all my participants today for a very engaging, enlightening, and very fun discussion. I think it was very, very fun and in a very lighthearted way. We've discussed very, very important topics. And I think a few one-liners, I guess that will stay with me. Behavior is an indicator of risk. I think privacy is an illusion or a myth. And of course, finally, we need to get the best from BNPL and avoid the worst. I think on that note, thank you again for your time and really, really appreciate all of you joining us today.
Thank you.
And until next time, it's bye
Thank
for
you.
now. Bye-bye.
Thank you for having us. Thank you.
Bye.
Thank you. Thanks everyone. Bye bye.
leading fintech company in India. SME Solutions, an innovative analytics software company in the fintech space. Our service offerings: Bank Statement Analyzer. Analyze prospective borrowers' bank statements to assess the creditworthiness and eligibility